Good morning, Canberra for Cam's Mortgage Minute on Friday, May the 17th. Seven economists are stepping up to bat and going to out there and defending CMHC. And they're basically saying that the soundness of CMHC and the fears of them having an implosion if the market melts down and borrowers stop paying is very, very overblown. In particular, Stefan Marion, chief economist and strategist for National Bank Financial, said those fears are overblown considering Canadian borrowers whose mortgages are insured by CMHC have had much stronger credit scores than those folks in the US prior to, let's say, the subprime meltdown. There seems to be a growing concern about the Canadian housing market and the risks it poses to CMHC and the banking system, Marion said. As some of the stories go, lending standards in Canada people have felt that they're too lax, and that now with loan to values exceeding 80%, CMHC is making it too easy for people to get into that part of the market. However, he held out that the underwriting standards in Canada have always been predominantly more tougher and more conservative than the ones that were applied in the US prior to 2007 and early 2008 before the meltdown. He said prior to the implosion, more than a quarter of the newly approved mortgages were for people with a FICO score. Now, FICO is the equivalent of our Equifax score or Beacon score, and below 620. And basically said that's 25%, actually almost 25% or greater people had that. Scores typically range in FICO between 350 and 850, and scores above 650 are generally considered to be good. Now, since the lending crisis has tightened in the US, now their mortgages are less than 8% of the borrowers who hold mortgages have scores less than 620. In Canada, however, things have been always a little different. Low credit scores accounted for about 7% of CMHC's business in 2012, down from 13% in 2009. So as you can see, his point is that CMHC has been ramping it down all along and have been tightening lending rules and being more restrictive. So the risk of the recourse, basically mortgages going sideways, if the value isn't there and people and borrowers walking away from their homes, is less likely, because he said these folks are more credit worthy and are less apt to walk away, and it's not going to create a scenario like 2007. You know what? As I've said to you before, from where we're sitting and from where we're watching, the market seems to be holding relatively steady. Again, it's no doubt that if your overall credit score, credit worthiness is fairly high, the likelihood you're going to walk away from your mortgage or any other debt is pretty remote. But time will tell, as it does everything else. Anyway, I just thought I'd share those comments with you, and especially in the recent light of the comments that have been coming out about CMHC, about overhauls and the type of job they're doing. Well, we're here at the weekend. Enjoy yours. I'm certainly going to enjoy my long weekend in BC. Here we have Victoria Day, so we're going to be closed Monday. And again, if you need anything mortgage-wise, don't hesitate. Give us a shout. It's Cam the Mortgage Man. We look forward to helping you with the Auxilium team. And again, enjoy your weekend.